Holy cow, it's Friday already.
Where did the week go? I know
I
one thing.
don't,
My
I don't know, but
dermatologist.
you
Huh?
look a little rough there. What's the other guy look like?
Yeah, I mean, the dermatologist did it to me. It's there and there. I got stuff on my legs. He was going crazy with the freeze machine. So
Oh, geez. Yeah,
hopefully I
those
get two pieces cut out. I had one about the size of a thumbnail that your thumbnail that was a sore spot on my leg, which I know is not a good look. So they're gonna biopsy it and see what happens. So
it's the
I
joy
gotta
of
get rid of
living
these
in the
before I go on
valley
this
of the
date.
sun. So,
So much for getting a date this weekend. For
yeah,
those.
that's good. Well, just wear a really low hat. So.
I'm just
I
gonna put a
got
lot of I'm just gonna put a lot of bandages on my face.
I've got a lot of numbers today.
Hi,
Hey,
Jackie.
our
Senior analyst is
our
on.
research analyst is here. Welcome,
Yep.
Jacqueline. Awesome. If we get any tough data here, we know who to go to. So
Yeah,
um,
thanks, Jackie.
So, hey, I've got numbers today. I got data, and it's going to be fun. I want to debunk what people are saying about Zillow, and I found the Wall Street Journal, and it sums up their whole problems in one paragraph. I can't wait to read it to you, but I'm going to jump right into the numbers first. We have 7,500. Oh, please call me Jackie. Okay, you got it. So, 7,544 homes on the market today, which is about normal, hanging in there for Friday. We're a little lower, 150 units. 7-day moving average, though, had a bit of a change, and I think it's all holiday driven. So 3,770 homes came on the market with 3,870 go under contract, and now we're on the positive side. So you look at this little tiny blip right there.
Mhm.
The homes under contract exceeded the new listings that came on, which meant we had a lot of closings yesterday. But we're starting to see our holiday dip. See how you got Memorial Day, 4th of July, Labor Day. Here comes Thanksgiving. So we're going to have the dip, and inventory is going to be painstakingly low. And now as we get into Christmas, and that's going to be something to watch. But I had a quick question for you, Pat, on this the relationship between inflation and the bond market. With inflation being as high as they're recording it right now, do you think the bond market is just taking it at face value that it's transitory and not affecting rates?
I mean, I think the bond market knows it's not transitory. I think the smart people know it's not transitory. But I think the bond market's been reacting. I was reading a piece, and I you read and do research, and I think the bot there was there's a couple of analysts saying Barry Habib said really rates should be higher. You take everything else out of the equation, COVID. COVID's being the number one thing. Obviously, bonds reacted a little positively today, and then because of the Austria outbreak or the lockdown.
Yeah, saw that.
And
Yeah.
I think the real smart people know. I mean, that bottom line is rates should be probably in the mid to high threes, 4 range, based on look at all this money that's coming out with the into the market with this whole it's not going to happen until 2020, next year and a half with this
Yeah.
trillions
See,
of
we're not
dollars.
even going to see any of that money till
No,
2023. I mean, gee, how
yeah,
convenient.
but the
It'll
market,
start flooding out right before the next big presidential election.
yeah, I mean,
How
like you
did
said,
that happen?
I mean, but I think they're saying that the case is rates should be higher. That's why I mean, right now I'm taking the stance. I mean, obviously we're seeing a little. I mean, here I'll share my screen real quick here if I can. Let's see here. Share screen.
It's one of those buttons.
Yeah, yeah. Let's see here. I mean,
Man, if you
shoot.
didn't have 7 screens, that'd be so much easier for you.
I know. There we go. I got 14 different screens up. But I mean, yeah, I mean, we're seeing rates. Rates went up. Obviously, this is the 10-year. This is actually this right here because I can flip between the price and the rate. This is price. This is why sometimes I show different. The price is inverse to the rates. But the 10 years at 154. we saw rates go up a little bit and they've come back down. We're, I don't think we're going to see back in September down here where we saw right here. We're going to be playing, I think, in just trending in this range. Obviously, we've been trending in this range since about October, and I don't see it going down here again. I mean, so I think if things are baked in, there's so much that, like I said, it's man, I tell you, it's hard to get just a one read on anything. I know I jump around a lot, but I mean, you got COVID, you got the inflation, you got gas, bottom line, everything's pointing to higher rates eventually going higher.
Yeah.
It's, but how much higher? I mean, is that going to slow? I mean, if they go to, there's trending in the low threes right now. If they go to the high threes, fours,
Well, if we hit 3.4% on the mortgage rate by Christmas, that'll be the one number that Realtor.com got right when they predicted 2021. Real estate was supposed to be up 5%, and rates would finish the year at 3.4. And then they had some other projections in there, but
that's pretty close prediction.
Yeah. This Zillow did. Yeah, they're right there with CoreLogic. So that's why I don't predict next year. Because I mean, if these big guys can't get it right, I'm not even going to be close.
Well, that's a thing. I mean, I was going to say something last week on this. I mean, you get all these yahoos that, you get one guy that keeps predicting. It's like the guy keeps predicting a market crash for next 15 years. Obviously, in 1 year, he's going to be right. So it's, it's. These people that keep, we have certain people follow. Everybody's trying to follow a prediction, but I think you and I are kind of doing it, just watching the supply. It all based on supply and demand. And until, obviously we're seeing, I will say that the supply, you get the supply chain disruptions, you got these bottlenecks, you got COVID, you got the feds, spending a lot of money. Obviously it's not going to play into it well, but the fiscal policy, so you've got just a bulk of stuff that's gonna, that's floating out there that I think it, if you look at the overall picture, like I said, in terms of my standpoint, rates, I don't see rates going down back to where they were a year ago.
No, I don't think so either. Let me jump to the Zillow thing. Okay, so the word on the street is that Zillow sees numbers that we don't see. They're seeing data, and they're convinced the house prices are going down, so they got out. They wanted to hurry up and get out. And people have, especially in the YouTube world, have been ignoring the fact that they just simply paid too much to these houses, and they tweaked their algorithms, their computers. So here's an article from the Wall Street Journal, and it says staffers grew concerned Zillow was paying too much. People with the familiar with the matter said, analysts whose job, and this is key, this sums it up right here, Pat. Analysts whose job it was to confirm the prices of homes found that they were routinely overruled. So it's like an underwriter. The analysts are coming in and going, "Hey, you're offering $450 for this house. It's only worth, 410," and they overruled them because the company had retooled the system to raise the analyst's suggested prices. So when an analyst says, "Here's the price," they reconfigured their computer, their algorithms to go, "Well, okay, well, we're going to do this." Automatic price add-ons coded into the company system was called a gross pricing overlay. That could add as much as 7% and would boost offering prices to get more sellers to say yes. So their goal was to get sellers to go, "I'll take that." And they were going after Opendoor in a project that was called Operation Ketchup, like ketchup and fries, but it was actually trying to catch up to Opendoor. So that's how they shot themselves in the foot right there. And they said some Zillow employees complained about the pricing in their company Slack channels and meetings, but their concerns were largely unaddressed. And they were told that the model was working as intended. In other words, they were getting a lot of homes sold. Then they went, "Holy cow, we've got too many homes. We're losing money." So now they're dumping them here in Phoenix. The number of listings they have has gone way up. We have 900 that they're getting rid of here in Phoenix. And from what I can see, it looks like they have maybe two people that are in charge of putting these on the market, a lister and a co-lister. And I see things that tell me that they are absolutely overwhelmed. And I'll show you the first thing
Hmm.
that I see that tells me that. And here's what it is. When you are overwhelmed, you take shortcuts, right?
Mm-hmm.
That's their profile
Wow. Really? Are you kidding me?
picture. No, and, and that's the only photo.
Wow.
Now,
Holy
you,
mackerel. That's
you think
hilarious.
that was so they have 998 homes. Now a profile photo is supposed to be your best foot forward, right? In other
Yep.
words, front of the house, green lawns,
Mm-hmm.
twilight photos, you name it, or perhaps just a dingy garage with a water heater.
Hmm.
That's a profile photo. So
Really?
I'm picking
No
on them
way.
because
That
yeah,
that's the first photo you
it's
pull
the
up.
main photo. See here on the left hand side, these are the
Yeah. Oh
thumbnails.
yeah. Yeah. Yeah.
This
Yeah.
is the actual photo. So that's that.
You know, it'd be interesting. Would it be interesting? You pulling up listings of Zillow homes. So did you just do a search like Zillow and say what
Yes,
all their
yeah,
listings?
company profiles. Yeah,
Be
yeah.
interesting to track some of these um, what they sell for.
Well, you can, and look at this.
But
So this one was originally they were asking 351.9, and now they're asking 334.9. And
interesting.
across the board, these are all
Are they
reduced.
all reduced across the board for the most part?
Yeah, yeah, yeah.
Wow.
And you can get in on Monsoon and you can see what they paid for them. So
Yeah.
this is telling me, and Jackie, you're right. It's funny. It's funny, but it's sad. I mean,
Yeah.
I think they've got one person go, look, go list these 900 homes, and you're sitting there at 11 o'clock at night, and you just got one eye open. You're going, this is the picture that the photographer sent us. It's comical,
Holy
but
mackerel.
it tells you they're really trying to get rid of these things, and they're just, look, we don't even have time to wait for the other photographer to get back. Just snap a picture with that phone when you're driving by in
Yeah.
your car, and I'll put it up.
That's amazing.
Yeah, they take time to reduce, but not time to change the picture. Yeah, it's nuts. And now here's another example of doing something with unintended consequences. St. Paul, Minnesota just implemented the nation's strictest rent control law, and it's backfiring tremendously. It's some of the most restrictive rent controls in the world.
Hmm.
And what's happening is um, less than 24 hours after St. Paul voters approved one of the country's most stringent rent control policies, Nicole Goodman's phone started to ring. Developers were calling to tell the city's director of planning and economic development that they were placing projects on hold, putting hundreds of new units at risk. In other words, you're going to do that, we're out.
Yeah. We're
We'll go to Wisconsin. I
yeah.
mean, they're out. So I have a
Just another
fly in my office. It's driving me crazy. Now, the other thing, what we're seeing here, speaking of rent, is we're seeing so many of these investors and all this Wall Street money coming into Phoenix and buying homes and making them rentals. And this is where this is the from Realtor.com. The metros with the highest share of investor buyers, we are number 6 in the country, with Memphis being number 1. And the share of homes purchased by investors in Phoenix says here 12%, with median rent at 1,700. So I kind of went and looked at some other data, and this is from Redfin showing investor market share,
Mm-hmm.
and it shows a couple different numbers. So if you look at 2021, which is what we got here, and the orange number is single family residential, it's showing about the same thing. It's showing 19%,
Mm-hmm.
but they have a 26% in multifamily, which is understandable. I mean, of course that's going to be owned by investors. The Cromford Index broke it out and said, here here's who the big buyers were in October. There's an outfit called RSS, bought 221, Progress 132, and then down the line. And it said 18% of the home purchases were not coded as rentals on the affidavit values. This means the affidavit rental counts may have to be regarded as suspect. In other words, there's probably more out there than what shows up in the county records. And we're also seeing that buyer traffic is way up, and it may be mostly with the investors, because they're saying, despite gloomy forecasts from some commentators, the actual numbers tell us that not only is the market very hot, but that it got even hotter the past month. Yes, a lot of demand is coming from non-traditional sources, those investors, especially large companies buying single-family homes to turn into rentals. However, that is still demand, and it removes from the resale market many homes that otherwise would contribute to supply. That's the sad part. The pool of homes available for sale is made smaller by these companies. The pool would get larger if home builders were firing on all cylinders, but they're constrained with the labor shortage and everything. So um, it says Paradise Valley and Mesa are standouts this week. Paradise Valley has seen demand spike higher while supply remains tight but stable. And that's again, that's a seasonal move with the high ends like Paradise and North Scottsdale. And this is the home buyer demand index. So while everybody's saying, "Oh, this is a shift, we're getting slower," we're not feeling it.
No.
Or look at that line right there, 23% over last year.
Yeah.
And I'm not seeing it. You know, something's gonna have to change. We're gonna have the inventory spike up or the sales drop. And I don't know how sales can drop when they're already at, that 3,400 a week. Because the lowest we've ever been is 2,700. So where are they going to go?
Yeah. No, it's well, it kind of you're spot on. I mean, you're spot on with your analysis. I mean, I
Now,
love how
looking at the Zillow numbers too, Pat, they're not giving away these homes. They should have been purchasing below that number in the first place. That one I showed you for three something, they tried to list them high, and I don't know what their computer system was talking to them about, but don't look at this as going to Zillow that you're going to get a fire sale. You got a chart you're putting up there, or what's?
Yeah, yep. This is a month of supply of existing homes is the lowest September. This is September, but look at that. This is going back to 2000. Look at our September. I just found that today. Thought that was kind of interesting.
Yeah, my brother's listing one of their rental properties with the use for a vacation property, and I looked up the data in his town. Listings this year are down 50% versus last year.
Yeah. So
50%. And last year was a pretty low number. I said, yeah, just ask whatever you want for it, Randy. It's going to be interesting. I think Thanksgiving week, they've only got 3 days for the bond market to make any moves. What do you think? I don't think you're going to see much of anything, right?
Nah, you're not going to see much of anything. I mean, anything. Well, I got to sneeze somehow. It's ready to come. I'm just ready.
You're going to have to mute your mic, or you're going to throw everybody off here. So,
sorry about that. I mean, it's not going to be much. I mean, if anything, rates will probably tick up a little bit because typically bond traders, I think it's a reduced hours on Friday. It's closed on Thursday, but reduced hours on Friday. So they just try to really unleash their inventory. So I don't think there's much going to be happening either way in the rates.
Now for buyers,
pretty unexciting life.
Yeah, I got to tell you this for buyers. It's Jackie's. God bless you. Buyers, you want to buy a house and you don't want a bidding war? Write your offer Wednesday.
Yeah.
Everybody's going to be at the store.
Yep.
So write an offer Wednesday, and they'll take it because they're going to want to talk about it at Thanksgiving dinner, right? Hey, we got an offer yesterday. I mean, it's just a theory, but I mean, it's, Friday is going to be really busy. That's the highest open house traffic that we have is on Friday. And right now we're rocking at 45% of homes going for over list, which is, it's still have almost half the homes.
Yeah.
And
I mean, the holidays are the best time. This is the best time that, to catch people. You can catch people off guard once in a while. I saw an interesting statistic on this. My mortgage back, they have this thing called by the numbers. It's talking about repossessed homes year to date. I'll give you the numbers.
Repossessed, you mean by as of foreclosures or?
Yeah, I'm recently repossessed, probably foreclosed.
Okay.
20,330. It says 20,331 homes have been repossessed by lenders nationwide year to date, October 31st. That's down from 50,238 repossessed for all of 2020. 143,900 in 2019. 230,000 homes in 2018. And 291,000 homes in 2017. So this year, just to sum it up again, 20,000 this year, 50,000 in 2020, 143 in 2019, 230,000 in 2018, and 291 in 2017. So,
Yeah, and the other stat I saw, when they said foreclosures are up 67%.
yeah,
Well, here's what that looks like.
yeah,
67% of this.
yeah,
Okay.
yeah.
In order to get to this, foreclosures have to be up 7,200%. So a headline of 67 it's baked into this number, folks. It's right there. It's just,
yeah,
we've had, less than, I can't see 140, 143. So,
yeah. I mean, look at that. I mean, that chart with the demand and the supply. I mean, obviously, if rates stay where they're at, I still think we've probably got a range. It'd be kind of interesting for me to sit down, what I could run the numbers, and if you bought a $500,000 house at 3, you're going to see a couple $100 month change if obviously you see rates going to the 4.5 range. But I think we got rates moving up even a point. It's still not going to really budge that gap too much. Do you agree?
I don't see, if rates go up, I think the reason that we're seeing more buyers now is because rates are going up.
Yeah. Well, I think I'll tell you what happens when rates go up. You start to see even more of a surge. I mean, I've seen this in the past where you start to see even more of a surge. People saying, "Holy crap, we got to get this done now before lock it in now before rates go from say 3 to 4 or 4.5." So
yeah. So I'm always wary of headlines. So now I'm not making a prediction. I'm not saying that next year is going to be up, but we looked at Mortgage Bankers Association and they said we're going to be up 12.5% the first quarter of next year. And then by the end of the quarter, we will be down -2. So you're still up 13% for the year, but then they projected out to 2023. I don't know how they can do that.
yeah,
but
there's no way.
Take it with a grain of salt because they projected that we were going to be up between 4 and 5% this year.
Yeah.
So it's, it's hard to tell. And no, we don't know where this government spending is going to land, both in numbers and actual, moving of things in the economy, because like we read this morning, most of the spending in that first bill and the second bill passed Congress this morning. I think it'll die in the Senate, but most of the spending on first bill they're going to pull the trigger on 2023 to get rolling. Well, that's just going to take time to make things, to make.
Well, even if they, implement it, it's still going to be another, after it's going to be another year to year and a half before it really rolls. So you're looking at 2024.
So I think in this market, I don't know what would make these investors start selling their rental properties, because they're scooping them up right now. So what would make them say, all right, let's take the profit and move on? It's got to be a glut.
Yeah.
If we've overbuilt in rentals and the rent starts coming down, and then the other hidden nugget is if tax policy changes to where they may down the road see a huge hit in capital gains, then we might see these developers just move their money somewhere else and get out of the rental business.
You'll see that shift. Yeah. That could be certainly but once again, though, I think you can't override the fact that we talked about this baby boom, demand, for people that, remember we talked the last couple of weeks about that gap, 2, 3, 4 year gap, why it's going to keep going. You can't, that's just a fundamental change that you're not going to change. That's just there. That's baked in the thing. That's where the demand's coming from. So like you said, I'm comfortable with the fact that people are buying a house now. I think, I saw something on the Facebook. This guy was saying about this one client. He said in 2018 that he didn't buy because he thought the market was overheated, and the house that he was looking at was up like $135,000. I think that this market's going to sustain it for quite some time. I mean, and I think, like I said, if rates go up, you always get that initial shock. That initial shock usually from rates lasts about a month to 2 months. Then people get kind of, if rates go from 3 to say 3.75, and they're going to stay there, kind of like they went from mid twos to 3.125. There's a little bit of shock the last couple of months where they, and you always see these little pullbacks in demand when rates go up that period. But once people get used to it, like, okay, rates are at 3.75 or 4, they have to readjust and say, what do we want to do now? I mean, could they go higher? So you see that rush. And I just don't see this. I don't see this really hurting the market that much. We're getting settled in here. There's obviously still a lot of stuff on the sidelines. COVID and the big thing is inflation. I mean, like I said, you and I talked about. I don't think it's transitory. I think it's going to be here for a lot longer than what we think.
Well, I think the rise in prices of food and gas has offset any of the increase that you saw in mortgages. So if they went from 3 to 3.18 or 3.25, that's a smaller number than your gas bill went up.
Oh yeah.
So,
yeah.
I was just sharing here. This is just listings under contract compared weekly. So we had a little bit of a spike up. It looked, and the listings on what we see here for active listings too is still muddling along. Had a little bit of a blip up, but this is going to go down, and we're seeing that today in my 7-day moving average. So we are going to follow this line straight down to Christmas. And then we are hoping for an influx of listings in January, but I don't know. And Jackie says, even if rates go up, then we have new first-time homebuyer programs. I think it will balance out if we don't get even busier. I don't know if they're going to have any first-time homebuyer programs, but they might. Something's got to roll. I mean, imagine what this market would look like if the institutional investors were not out here outbidding us like they're doing. We could probably be pretty close and marching towards a balanced market, but they're getting in the way. And I don't know how you legislate it away. I don't think you can, because look what St. Paul tried to do. You end up with unintended consequences. So I don't know.
Yeah, I mean,
I'm glad I'm not a politician.
You can't legislate, the market like that and say, they did that. I mean, they did that with, so if you're buying a new home, you can't be, there's sometimes it's like, we're gonna give first time home buyer the shot before the investor.
Well, I've got a YouTuber, a subscriber I'm meeting in an hour in Scottsdale. He's here from out of state, and we're going to talk about condos in Scottsdale. And so it's a good way to start the weekend. So
Good.
Other than that, I hope your damage there heals quickly, Pat, and good luck on the biopsy on the leg. That's never fun.
Exactly.
Let me know how it goes, because I'm probably right behind you.
Yeah. Good luck to you too. So have a good weekend.
Have a super weekend. Thanks to our millions of subscribers.
Yep. Lewis Bale he said one last comment. What was it? We've gotten outbid by cash buyers 10 times, have given up for now.
Yeah, it's frustrating. I mean, when you got the cash people beating you down, it's like, well, sometimes you don't even want to write the offer. I get it.
I think you just have to,
the bat, just keep going. And
you can't give up. I mean, I've had people look for a year and a half. I mean, if it's meant to be, it's meant to be. And, you got to look at it. If Lewis Bale, if you got to look at it as a positive, say, if you got some stuff to tighten up, or if you can shore up some cash, you're going to be in a home buying mode here, whether it's a month or 2 months or 6 months or 7 months, just tighten up your, I would use that time to tighten up your own financial situation, make it even better.
I would go shopping Wednesday.
Yeah. Yeah. This next 30 days could be, you might find that gem, this is the best time. You might find that gem in the rough, people can't, it's not easy. The low hanging fruit's been gone the last year. It's not easy, but if you're determined, now buying a house is not, it's like you said, we talked about this several months ago. It's not easy work anymore. And, But if you got the right agent, helping you negotiate, and agent that's listening to what you're looking for and tell you the truth of what you're looking for might not fit your needs, and like you do. I mean, you'll tell it right up. Like,
cash is a hard one to beat up, hard to beat, but I always make the phone call first.
Well, I mean, you know what?
Have you got any offers? Tell me what it looks like. Do you have any cash offers? At least know what you're up against. And guess what? If there's cash on it, like, hey, let's get in the car, let's move on, and keep going. And so I think these institutional investors are going to take Wednesday off, Pat.
Yeah. True.
So, well, everybody, I got to scoot. Pat, have a super weekend. Talk to you soon.
All right, buddy. Take care. Bye-bye.